final program for 2021 here on Rex today, and it's great to have the GM of Rural at Property Brokers, Conrad Wilkshire, joining us for the final program. Conrad, very good morning.
Morning, Dom.
So, yes, indeed, last show, and look, an interesting topic to talk about today, and there was an old saying, most people will have heard this one, in relation to land, Conrad, they're not making any more of it, but you reckon that there's almost a wee tweak needed to that saying?
Yeah, I'd say, I think it probably needs to shift. There's less and less of it. So, yeah, that cliche has stood the industry in good stead for many a season, but actually, if you look at the changes in farming and you look at the restrictions on production and where things are today, it's about doing more with less. And, it definitely seems to be the case. There's less and less land available. There's a lot of competing land uses. And while forestry's dominated the headlines, if I look at what's happening on the town boundaries, there's a hell of a lot of land going into to support the urban development, and that's, we're seeing record prices for that too. So it's on a range of fronts.
Yeah, let's look at a couple of those. Let's look at the sheep and beef hill country, the market for that at the moment. Where's that sitting?
Well, I've just reviewed the Lower North Island sales, and I looked at half a dozen sales that we've been directly involved with, and none of those are under sort of that 10,000 hectare mark. Well, just under the 10,000 hectares, and there's some that's going for more. And these are very large, and none of these properties are under 300 hectares. And so some are going to sheep and beef, and sheep and beef farming syndicates and partnerships, and some are going to, the change in land use in favour of forestry. Some of which will be carbon. So if we have a look at our business for the year for 21, we'd have done in excess of 70 million in sales to forestry this year. So that's a big deal compared to a number that wouldn't have been struggling to be 15 million not too long ago.
Wow, it's huge, isn't it?
And well over 7,000 hectares. So and all of those properties were under campaign, and we've taken them to the wider market. But so no, that's definitely been a feature, and it's underpinning the market. We are seeing unprecedented prices for sheep and beef country, and in excess of 20,000 a hectare for some of these well-located sheep and beef properties in sought-after locations. So farmers are definitely buying them too, but everybody's having to step up to valuations that would never have been considered, Dom, maybe even a couple of years ago.
The extraordinary numbers we're talking about here. The other interesting one that you touched on in the opening there was in terms of the rural land on the town boundary. Now that is another area that's enjoying exponential growth.
Yeah, look, we've always known that pressure's there, and it's evident wherever we need to be key provincial locations around the country. We've seen our local towns thrive, but what we haven't seen probably is around provincial New Zealand, it's, anywhere can be between $10 and $20 million for what are relatively small rural holdings. And if it's close to Hamilton or Tauranga, it's probably double that range. Some of the evidence I've had a look at lately. So, look at that, and you cannot blame vendors for looking at those options, because, there is this huge demand for residential property and a lot of town planning going on at the moment, though. Quite where they're going to get the materials for to build these houses at the moment seems to be a very vexed question, but it's not stopping the demand in terms of people land banking for the future from a development perspective. So
the big drivers then for the rural market, what do you reckon?
Well, look, if you're looking for an opinion, I genuinely believe that a Tier 1 dairy farm is the best value for money in rural New Zealand out of any rural New Zealand land class currently. And to back that up, we're seeing the beef sector taking full advantage of what I would call a relatively flat dairy market. We're just not seeing the amount of offers coming in on the dairy, on really good quality dairy farms that we would have anticipated this season, though we are, we've sold 60 dairy farms over 2021 and sold them well ahead of the same time last year. But to give you a number, that would be averaging about 28,000 a hectare was the median price. If I was talking to you this time last year, Dom, it's now about 42.
Wow.
That's on our sales.
Yeah.
Of those 60. So that's a shift. But even with all that shift coming in and that recovery, and is actually a lot of that demand is coming from the beef sector. Now, for the beef producers out there, they wouldn't have a problem with that, because they said, well, we lost about 1 million hectares to the dairy sector through the 2000s, and they're probably looking to win a bit of that back. But if you look at the strength of the dairy sector, and last time, I did spend a little bit of time doing my Bachelor of Agriculture, and at that stage, a methane from a black cow was the same as a black and white one, but it doesn't appear to be the regulations. So it would appear to contradict that, which I'm still struggling to fathom with, because last time I looked, it looked the same when it came out the other end. So the reality is, we've got the beef sector can see the value in the land, and they're back in their industry and going with it. And I think the best value of the opportunity for it is a dairy farm, and I believe dairy to dairy we'll see a lot more of that in 22 than we have in 21. So
where is the market at right now as we sum up the end of the year?
Well, it's probably not only the housing market that's up about 40% pre the pandemic. I think while the market drivers for raw are very different, and they're nothing to do with interest rates or payout, but a lot to do with regulations, staff constraints, and alternative land use options. Our raw market is up at similar levels if you were to go back to pre-pandemic times, and we've seen a wonderful recovery in the market. We're at about 3.6 billion as it stands now, rolling 12-month average, and it's about on the last 12-month time, that's about $1 billion up on the same time last year. So there is no question that farming's on a firm footing. Always has been, by the way. But the market is also valuing it on the same basis. But it probably could go a bit further.
So, that is the multi-million-dollar question then, isn't it? Just to wrap it up here, where do you see it ending up, come the end of the season?
Well, on current trend, it is the time of year to make predictions and put it out there. But, Dom, I think we could easily see the rolling 12-month average by the end of the season in excess of $4 billion for the market.
Wow.
And we haven't been there for a long time. And that will be, I believe, strengths reflecting across all land classes, including dairy, by the end of the season. Because, water always finds its own level, and as the money starts to roll out of the hills, I think you'll find that downlands country becomes more and more expensive.
Well, that is pretty extraordinary sort of numbers we are looking at currently, and indeed into the rest of the season. Conrad Wilkshire, GM of Rural Property Brokers. Listen, it's been great to have you guys on board with the program this year, and your own personal contributions to both this show and Rex as well with Hamish and Loie. So thanks very much for all of that, and listen, have a great Christmas, a happy New Year, and we'll do it all again in 2022.
Yeah, thanks, Dom. No, it's a great partnership we have with you guys, and importantly, it's a great way to connect to your listeners who are actually out there making it all happen on the land, and it's always been a productive sector, and it will continue to be.